Hello and welcome to the Paytech Show. This week we're taking a look at the effects of Swift GPI in 2019. We sit down with global payment solution experts, ACI Worldwide, and get some extra insight from the ING Group, who adopted the Swift network in 2017. First up, we take a look at the benefits of Swift GPI to modern institutions.
From ACI's global customer base, we're really hearing three key trends on why they're adopting Swift GPI. The first is speed, the second is certainty, and the third really is transparency. And what's driving all of that and what's important for Swift GPI is to be seen as all those three, to provide that really holistic customer experience that banks can offer their customers.
What are some of the benefits of Swift GPI for some of your ING customers?
So Swift is a network for correspondent banking. So they do two things. So they have connectivity, but they also build standards. So that what I said, that we all use the same standard, so that it's easy to connect to each other. I explained a little bit on the complications of current cross-border payments, which is like long chains and then taking a lot of time. Relatively high cost and also lack of transparency. And with GPI, we are really working together as ING, but supported with other banks, to reduce all those pains. We are the first priorities on transparency, and there the tracking and tracing is important. So we have enabled our systems and there with our clients with the tracking and tracing possibility. The next step will be and that already happened at the back of this, but to reduce the time so that the money flows in, say, on the same day, and reduce fees on the back of that. So that is really what the GPI is working on.
The benefits for a bank are very much about the transparency of the information, the transparency of the flow of the information, the certainty that it's going to actually arrive at the beneficiary when someone says it's going to arrive at the beneficiary, and of course the speed of which it happens. So GPI transactions, most of them now are occurring within about 30 minutes, which isn't instant real time, but globally that's pretty close to being fast enough. Obviously we'll see improvements as the years go on, and there are some payments that are happening in just a few seconds as well in the right payment corridors. So we're seeing a large growth of GPI transactions, but we're also seeing what Swift themselves call the long tail as a slow ramp up. So what we mean by that is a bank's head office can get live on GPI and start to work with GPI transactions, but most of the multinational banks will also have branches around the world, which quite often may even have a different payment solution than the core system in the head office. So they also need to enable their international branches, and that's what's called the long tail. It's the harder bit of the banks to actually get connected. And one of the services and solutions that ACI bring to market is our Connect service, which is intended to help those branches actually surround their existing infrastructure and take the pain of GPI connectivity away from them.
Next, we talked about the ways that cross-border payments have been revolutionized by Swift's global payment initiative.
I think Swift GPI has not structurally changed anything. So the network is still there, but what they have done is to improve the network that is there. And with that, they have, we will be able to reduce really the pain points that we touched upon earlier. So transparency, cost, and speed of the payment will really go down. And if that really goes down, and then on the back of that you can use that kind of payments for much more things. So for example, if you want to do an e-commerce payment now, or a transaction, so you want to buy something, it might take 2 days or 3 days before an international transfer has moved from A to B. So quite often you use a credit card, for example, for that payment. With Swift GPI, you not necessarily need to use a credit card anymore. You can also do that via a cross-border payment. So it gives you more possibilities to fulfill your payment needs. And with Swift GPI, we really will facilitate the world that has become global and real-time online.
GPI is just another way of making payments. It's is the dominant way of making payments cross-border, but Swift with its GPI initiative is just a way of making payments. And ACI's stand there is that there are multiple ways of making any payment. It may be through alternative cross-border mechanisms. For domestic payments, there may be 2 or 3 different schemes, including a real-time scheme. For us, it's about enabling a bank to process any kind of connection, any kind of endpoint, and GPI is just one of those, alongside traditional RTGS systems, maybe some kind of blockchain technology as well. There are multiple ways of doing it, and this will all be about bringing choice to the bank's end customer. The question will be to a customer, how much do you want to pay, what information do you want, and how quickly do you want it to arrive? And based on that, the bank can act as an advisor to the corporation, the customer, as to what the best way of making a payment is. So we'll see a lot broader choice for customers and consumers in how they can make their payments internationally.
In terms of the bank itself, have you found that typically cross-border payments had been quite a profitable area for banks? And now, see, it's expected that you'll be able to do that for a lot cheaper, but you're a lot more efficient. Have you found that the cost savings completely outweigh the decreased revenue there?
That's always a difficult question, but those things do balance, and a growth in cross-border payments, as I discussed earlier, does help as well, because payments in the end, it's really a scale business. If you want to have like the flawless processing, you need to do the same sort of investments I talked earlier about for like a $1 payment or a $200 million payment, roughly. On the fraud side it's a little bit different, but on the process. So the growth in volume will really help to bring down the cost, as well as the investments we have done in the digitalization.
And does that link into, the first thing you said was it's all about the customer experience. Does it link then into that? Yeah,
I believe so. So of course nobody likes to pay for paying. I think that's a given. We believe if we really can solve the client needs, and we can do that in a way that really facilitates the way people want to do business with each other, that's the value we really want to bring.
Thanks for joining us for this episode of the Paytech Show. For everything GPI and more, be sure to check out the rest of our series on our website, www.fintech.finance. See you next time.